Welcome to Partner Path, a podcast that unpacks the venture capital and growth equity ecosystem from a junior perspective. Young entrepreneurs and investors have already had a massive impact on the industry, having started unicorns and launched billion-dollar funds. We discuss these success stories and more by sharing perspectives and advice from some of the industry's most prominent role models. This podcast expresses our views as of the date published and does not represent the views of and is not endorsed by any company for which we work.
So we are excited to welcome our first guest, Matt Liu from Cowboy Ventures, based in New York City.
Hi, guys.
Hi, Matt.
Good to meet you, Matt. How's it going?
Good. How's everyone doing?
Excited to have you as our first guest.
Excited to be here. Thanks for having me.
Matt, it would be great if you could walk us through your background. Where are you from? Where'd you go to college? Just give the audience a feel for who you are.
Yeah, first of all, thank you both for having me. I'm super excited to be here. This is my first podcast and very excited to share my experience. To give some background on myself, I was born and raised in Hong Kong before attending Stanford, where I studied at the intersection of social sciences and technology. And in college, I worked toward the goal of becoming a product manager. So that led me to internships with startups ranging from 10 people to over 1,000 people. And when the pandemic hit, I was really mulling over what I wanted to do after school. One of my product mentors recently at the time jumped into an investing role. And through him, I became excited about the prospect of being in venture, especially at the early stage, where I think, instead of building a product or scaling a product from 0 to 1, you're helping founders take a company from 0 to 1. So I mapped out my entire network at the time. I lined up dozens of virtual coffee chats with people either in VC or adjacent, not really with the goal initially of finding a role, but really to learn more about the job and start showing value to investors. And a few months later, a friend at NEA heard about an open role at Bullpen Capital and offered to connect me to an associate there. And that's how I started my interview process and ended up joining them in early 2021.
And so what was your day-to-day like as an analyst at Bullpen? What were some of the biggest challenges you faced, given that it was your first job and also not a lot of people go into venture after graduation?
Yeah, absolutely. I'll touch on the day-to-day first. So my role started really as acting as top of funnel for the firm from an inbound deal flow perspective. So for context, Bullpen has a very specific investment model, which is identifying non-consensus companies between seed and Series A, which Bullpen termed post-seed. And our goal was to help these companies scale towards the next round. And because we had such a specific niche, a lot of investors and founders would reach out to us with opportunities. And my job at first was to find the best ones and work with the partners to diligence these companies and hopefully invest. So we would work to find signals of product market fit within the data, do our best to understand the companies and how they could mature towards more consensus Series A rounds. And as time went on, my role expanded to cover other functions, including some portfolio support, as well as helping build fundraising materials. So that's kind of the day-to-day. I think it started out very much focused on how can I drive great investments? And that begins with finding the best opportunities for us to dig into. And then it evolved into more of the fuller stack of what a junior investor usually does. To touch on the second part, you're absolutely right. I mean, it is super daunting to enter venture, I think, at any stage, but being as inexperienced as I was, both in the workforce and from an investing perspective, there were some early challenges. To break them out, the first one was starting remote. And I'm sure a lot of people around our cohort can relate to that. I think people always say venture is an apprenticeship. I completely agree. You learn the fastest when you have FaceTime, when you have touch points. I think venture should be high friction. Starting remote was very challenging, and it took a lot of intentional effort to build relationships with people on the team, but also get comfortable talking to founders remotely. I think the second challenge was that I was just really green going in. I had no idea really what to do as an investor. And I think from the outside, VC can seem really glamorous, right? You see a lot of internet memes where the job of venture can seem really easy or really chill. But what I learned quickly is that it takes a ton of hard work to become a sophisticated investor. And so you really have to be learning all the time. And I was super lucky to have two great associates with me, Dylan and Anna, who I leaned on in my early days. And I worked especially closely with Dylan, who went on to join Box Group in New York. So I found that just incredible to have a support system, to have junior investors who care about your experience and who can, teach you from their own perspective. And not to go on too much, but I think the last thing is really how to find great companies, right? I think at the end of the day, that's your job as a VC, is to be a great picker or, choose great companies. And my partner, Eric at Bullpen, had a great saying, which is the first 100 companies you meet, you love. The next 200, you hate. And then after that, you start to figure out what you're doing. So I think it just takes a lot of reps.
Makes a ton of sense. Sounds like you're at Cowboy now. Would love to get the intro. Walk us through the fund strategy at Cowboy. What sectors do you guys focus on from a fund perspective? And what stages do you focus on? And check sizes, the whole gamut. And then would love to hear about the new fundraise as well.
Absolutely. So super excited to join Cowboy. I joined them about 2 months ago. So very fresh to the job. I also moved to New York 2 months ago. So I'm part of the 2-person New York team here. And we're a seed, pre-seed focused fund. We're generalist, but there's a few lanes we tend to spend a bit more time in. And those would be infrastructure software, dev tools, AI, ML, security and fintech, both enterprise and consumer. We like to partner with entrepreneurs really at the earliest stage possible. We're not averse to taking pre-product risk. The best way to describe our investment philosophy is that we're low velocity, but very high conviction. We'll partner with 1 to 3. Each partner on our team will partner with around 1 to 3 new companies a year. And so the goal for us is really to roll our sleeves up, work super closely with these companies, and build really, really strong relationships with them versus, I think, being a more high velocity seed firm that invests in a lot of different companies every year. And then to touch on the fundraise, we're super excited about it. We announced it last month. And so that would be $140 million for our core pre-seed and seed focus, and another $120 million for our first opportunity fund, which we very thematically named Mustang. And so that'll be for us to double down on our founders. And really our check size traditionally for the core seed and pre-seed has ranged from $500,000 to $3 million. And we prefer to lead. So those are some of the specs on, how we invest. And, we're super excited for the year ahead.
I love that. And I love the cowboy theme too. If you actually go through the website, I think everyone on your team wears cowboy hats on their profile pictures.
Oh, yeah.
So that's great. Would love to hear a little bit more about the differentiation you guys kind of pose. Obviously, there are a lot of pre-seed seed funds in the market.
Mm-hmm.
Sounds like you guys take a fairly concentrated approach. Typically, pre-seed seed is kind of a shotgun approach where you spray and pray and have a wide portfolio and hope a couple of them hit and hope for the power law. But sounds like you have a little bit more of a concentrated approach. We'd love to hear about where you guys kind of pitch as differentiation in the market.
Totally. And I think you're right. There's so many different approaches. You have firms that are, incredibly high velocity, that invest in a lot of companies. You have multi-stage firms that have increasingly spent more time at the early stage, especially given how the market looks right now. For us, this has always been Cowboy's ethos, right? We're stage focused. We're not scared to partner with founders at the very earliest stage, as I mentioned. Having that kind of risk appetite, as well as that temperament to be able to work with founders as they're building the product, scaling from 0 to 1, I think that's a very unique kind of skill set. And I think we see a lot of potential with founders when we partner with them that early. And really, I think it comes down to understanding what product market fit looks like and how we can help our companies build towards it. So if you look at our track record, we have a really strong track record helping our founders reach that Series A after the seed, pre-seed. Over 90% of our companies have graduated to the next round. And really, we try to support them in all facets, right? That could be building out the team, financial planning, customer intros, brand positioning, or helping with the fundraise. Really, we try to just, again, roll our sleeves up. We're a small team. We're 5 people. We don't have the capacity to invest in a lot of companies every year. So that's why we're high conviction. We intend to, help our companies scale for the long run and be a part of that journey for a really long time.
That's great. And how do you guys typically divvy up sector focus? Are you guys focusing on one area? Are you more opportunistic? And how does that change?
It's a good question. I think generalist is how we would describe ourselves. Just looking at our portfolio, you've seen we've invested in companies across a lot of different categories. At the same time, I think we've found there's a lot of value to having specialists within the team. And so in terms of how it's divvied up, the best way I can describe it is that Aileen and Allegra are amazing chief of staff. They cover a really broad spectrum of sectors that include healthcare, enterprise SaaS, some consumer software. Then we have our partner, Robbie, who I work really closely with, and she's our infra software expert. She has an incredible knowledge of open source, dev tools, cloud data companies. That's been her background, since she was at Norwest before she joined Cowboy. And then our partner, Jillian, here in New York, brings the expertise on the fintech side. And, it lends to, I think a lot of it has to do with her background at Anthemis, as well as being just so tied into the New York City ecosystem, which I think has a really strong fintech community. So she looks at both enterprise and consumer opportunities in fintech, but also has been looking at some vertical SaaS stuff. So I think that's the approach we figured out works best. we want to cast a broad net, have coverage over everything we think is exciting, but also have members of our team who have built strong backgrounds, strong track records in specific sectors. So when we actually support our founders, when we talk to founders, they know that we can bring a certain level of support as well as know-how as they scale.
And you mentioned the New York fintech ecosystem, which I've heard is very strong, but it brings up an interesting point and specific to your background where you have experience investing in the San Francisco Bay Area ecosystem as well as the New York ecosystem, which is fairly uncommon for younger investors. Would love to hear kind of what do you see as the main differences between the various ecosystems? How does it range or differ in terms of culture, valuations you typically see, founder expectations? Would love to hear kind of what your thoughts are in the differences between the two.
It's a good question. And I definitely want to caveat my response by saying this is my perspective, a single investor and somebody who's still a junior investor. So I'll tackle it from that lens. So forgive me if I make any kind of sweeping generalizations here, but I think West Coast is, it's still obviously home to a majority of VC firms. There are a lot of established players there. And I think there's still a lot of value to being in Silicon Valley because it's such a hub for tech talent. That being said, what I have seen, and this ties into my own experience, is that a lot of the West Coast firms have shifted to very much a hybrid or actually fully remote model. Again, that's a generalization, but that's a data point from myself as well as a bunch of other investors that I know in the West Coast. And then to get a little more granular, what I love about New York is that I think it really lends itself to an active venture ecosystem, right? I think there's always events to attend or host, and in-person meetings are a lot easier. I think there is a lot of value to using Zoom for some meetings for efficiency. But as I touched on earlier, I think FaceTime is, if not the most important, one of the most important parts of being in venture early and building relationships. So that's kind of like the overall, I guess, energy compare and contrast that I have in terms of the West Coast and the East Coast. And then touching on how people invest, I think traditionally, New York firms have had a bit of a narrower focus. This is such a hotbed for fintech, as I mentioned, prop tech, healthcare. You've had a lot of firms that have built really strong repertoires in those areas. At the same time, as the startup scene here has matured, I think we're seeing a lot of younger firms emerge, a lot of generalist firms like Cowboy that are expanding their presence in New York as well. Lastly, to touch on investment specifics, I don't know if there's too much to kind of compare and contrast, right? I think venture as a whole can sometimes have a herd mentality. At the same time, I think each firm takes a different approach. And really the bottom line is to identify great companies that are category defining and drive high returns. I mean, that's what we're all working towards.
Yeah.
So would you consider yourself a New Yorker and you're saying for the foreseeable future?
I think I am. Yeah, I think this suits me better. Again, I'm making a lot of generalizations here, but I love the energy in New York. I love the community here, and I love access to meeting founders and other investors in person. I just think you can't beat it.
Yeah. And how about more specifically touching on culture, both in investing teams and on founding teams? Do you see any difference there, given kind of the variance in remote versus in person?
That's a good question. I mean, again, I think it really differs company to company and firm by firm. If you place enough emphasis on having an in-person culture, it's easy to build, right? I just think it takes starting from the top. The partners want to have to buy in and understand that they might be comfortable in their job and they might be comfortable in the capacity of working remotely. But a lot of junior investors, especially ones that are starting new jobs, aren't. And building comfort with them, I think, drives a lot of value because it enables junior investors to speak their mind. It enables junior investors to build skills and understand how partners think and what kind of companies to bring in and how to just think about the smallest things, right? And I think you really can't sacrifice any of that. Now, I'm not saying that West Coast firms do that more so than New York firms. There's a lot of New York firms that have hybrid or remote policies, but I think as a generalization, to me, such a strong part about building culture, just having FaceTime. In terms of culture differences that I've observed, I don't know if I'm the best person to speak on it since I've only been here for 2 months. That being said, I do feel like, especially among junior investors here in New York, people are a lot more social. People want to go to events and a lot of times, I think firms here so far have been smaller or are smaller. Usually you don't have a cohort of investors around you. And that's why you kind of push yourself to meet others that are also young and new to VC.
Given that you are operating in the pre-seed and the seed ecosystem, and it really is centered on the founder. Who is the founder? When you see a founder pitch for the first time, you're trying to gain that conviction to move to the next step. So
Mhm.
what does a successful founder pitch look like to you?
It's a great question. I'm still trying to calibrate, right, what a great pitch looks like at pre-seed and seed. But here's some things that I've observed in my short time at Cowboy, working especially with the seasoned investors on our team. I think really a great pitch, it really comes down to distilling the problem, explaining extremely clearly how a solution is being built around the customer. So we look for a really strong understanding of the customer persona and a vision of how to successfully go to market. This also means, being able to show an incredibly strong value prop for that persona. And that's what we look for in that initial pitch, right? There's all sorts of other stuff that's important. At the very end, we really try to distill, okay, is this something that an enterprise or a consumer will want to use, will pay for, and why? And if that story is crystal clear, that's a great pitch for us. And I remember Robbie on our team telling me this story that when she and, our partner Ted first partnered with our company Drata, which is a company that automates compliance, the team had done over 100 interviews and tests with CISOs and other prospective buyers, and this was all pre-launch. So when they eventually went to market, I think they have the strongest product hit rate both Cowboy had ever seen, and they've grown like crazy ever since, right? So just finding those pitches that really distill who they're building for, why they're building now, and how their solution has been tailored towards that persona from day one, we think that's incredibly important, and that's what really stands out.
Now, that makes complete sense. And so on the flip side of it, what are the red flags that you look for or that come up during the pitch?
Tied to my earlier answer, I would say there are a lot of really talented founders, and it's sometimes hard to kind of discern, okay, this is a company that we want to dig into a little more, and this is one that maybe we won't spend as much time on. What it comes down to is it a tech-driven kind of product idea solution, or is it a customer-driven product idea solution? There's so many ways that you can innovate with new technology, and I often hear in a pitch, this has never been done before, right? X has never been done before. I think really the question is, does anybody need X, right? Because you could be building the most novel product of all time, but if there really isn't a strong need for it, whether that's on the consumer side or enterprise side, it's really hard to scale the business. From my early observations, again, in my very young career, that's something I've noticed as a key differentiator between a company that we would really want to dig into and one that I guess needs a little bit more work around go-to-market, understanding personas, and understanding buyers.
Right, because chances are it's already been done, but how are you doing it different and better than what's currently going on in the market, which it's such a good example with Drata, because after they really took off, a lot of smaller companies were trying to implement the SOC 2 HIPAA compliance in a fast and efficient way, which I spent a lot of time in. And unfortunately, there's too much green space that's already been grabbed, which is a challenge for the smaller players.
Yeah, you're absolutely right. I mean, that's definitely the way we think about it.
And so while we're on the topic of pitches, sourcing, diligence, now that you have experience sourcing at 2 different VCs, what are some of your best practices and things to avoid when you source at the seed stage? And, maybe start with, how do you source?
It's been an interesting education for me, I think, because at Bullpen, as I mentioned, deal flow was so inbound driven. We had a unique place in the market, in the venture ecosystem. And so founders who were operating in that post-seed, they knew how to find us. Oftentimes other investors would send us companies that were raising that kind of seed plus seed extension round. So sourcing was not as much of a priority. It was very much a kind of side initiative, right? Something that you could bring to the table. Now that I've transitioned to Cowboy and we're operating at pre-seed and seed, which is incredibly competitive and very crowded, sourcing makes a huge difference. And in terms of how I source, I mean, there's all the kind of traditional playbooks that you've seen, right? Working through your network, building tools that can track on sites like LinkedIn, where founders are coming from, starting new companies, and tracking talent as it migrates from really great, really top tier, high growth companies. I think what I've learned, especially over the last few months, is investors can be great signals sometimes, but the reality is more often than not, they're sending you things that they're not super interested in. And that's just the reality, right? And so I think really focusing on building a strong network of angels, operators, and founders who could be super connectors yields the best opportunities. So we look for product and engineering operators from high growth companies, founders as well, who can be great sources of budding entrepreneurs. And also they help us keep a pulse on if we're following the right trends. So at Cowboy, we've built an incredible network of operators, founders, and angels that we call our Wrangler network. Again, being very thematic. They serve as sources of great companies, but also as advisors, right? As people who can recommend talent and help our companies hire. They serve as a second opinion when we do diligence. And they're really amazing. They're really, part of the backbone of what makes Cowboy great. Having a strong emphasis on that has been huge for Cowboy from day one. And I'm learning to build my own kind of network now that I've moved out here to New York, especially in those areas that I mentioned. So that's how I would describe my approach to sourcing. In terms of the what not to do is there's so many conversations you have with other investors or, other people that have deal flow. And if you're too transactional, if it's too one-sided, if you're always just asking, that's a quick way for people to just not ignore you, but kind of ignore you. And so really what you want to be doing is providing value both ways, right? Listening carefully to what people care about, what they invest in, what they're curious about. And it might not be a company that they're going to invest in, but it could be an article, right? That helps them think about their space. Or it could be interesting tweet, right? That you saw and were like, oh, this person could find this interesting. Making sure to build that relationship very carefully and thoughtfully is underrated because everybody's so busy, but it pays off.
Yeah, I completely agree. And I've also found in my network that there's some deals that get passed around the VC ecosystem, and you'll see the same deal from different people who operate in similar stages. And at that point, everyone is passed for similar reasons, and you would most likely not want to engage with diligence. But I'm curious, do you scrape stealth companies on LinkedIn or on the internet?
So we do.
Okay.
And huge shout out to a former Cowboy intern, Warfa, as well as our current Cowboy intern, Mathura, who have built this amazing tool that we call Lasso. I know there's a trend going here. And for us, what that tool does is exactly what you said, right? It scrapes LinkedIn, Product Hunt, and I think we're going to include GitHub fairly soon for founders and products that are promising, right? And so we really optimize for a few things. We optimize for companies that we think produce great talent, that have exceptional product and engineering teams. We look for people that are spinning out, starting something, and particularly people of a certain kind of function within the org, right? So that's a great tool for us to just have broader coverage. Obviously, it's not perfect, and we still need to go through it and understand who fits our profile, who doesn't. It's an incredible tool for us to just make sure we're seeing everything that we could possibly see. I know of other firms having similar tools, either built in-house or using something externally. To me, I think that's kind of almost a base case of what you need to be doing at pre-seed to just make sure you're seeing everything. So really the tough challenge and one that I'm still trying to figure out is how do you go beyond that, right? How do you find the companies or the founders that haven't even maybe thought about starting a company yet or are at the very, very earliest stages and building relationships there?
Yeah, and you're definitely doing the right things. Going to dinner with founders, building that network. Someone connects you to someone else, and then they have a friend who's developing a product that could be of interest and could be your next unicorn. So it definitely sounds like you're on the right track. And, I also know that Cowboy places a huge emphasis on marketing materials and content. And to my understanding, this is a bit newer to you. So I'd love to hear, what you're working on related to the VC processes in terms of your content distribution right now.
Yeah, I want to start with a quick shout out to our team. I mean, everybody on the team has just done an amazing job of producing quality content and not just for the sake of it, right? Obviously, there is that functional use case where it drives brand recognition and it's a way for us to connect with founders who want to learn more about Cowboy, but also because we hope it serves a functional purpose for them, right? Maybe it teaches them something about a market they're interested in, or it offers some sort of insight into the investing world for other investors. So that's been a huge emphasis for the Cowboy team. Robbie on our team has an amazing podcast called The Open Source Startup, which he's been doing with Tim Chen for a few years now. And they talk to open source founders, both of the biggest companies, including your HashiCorps, but also startups like Mobile Dev, which we invested in, and Elementary Data, right? So those are just great ways to put our name out there, but also show how we think about things and hopefully kind of help people who are interested in similar spaces. And then on my end, I'm very new to the content game. Again, it wasn't an emphasis of mine at all at Bullpen. And I'm starting out with a blog post that we're going to release in a couple of weeks, which will be about breaking into VC. So kind of similar to what we're touching on today, as well as navigating your first year in VC. And actually, Robbie, as well as our former colleague, put together the first version of these resources in 2020. And funny enough, I used them when I was interviewing at Bullpen. So I found a lot of value in that post, and hopefully I can pay it forward working with Robbie on this newest edition. So yeah, if you're bored or if you're curious or if you want to learn more, you should definitely check it out.
No, thanks, Matt.
That's great. And I think a good transition to what is fueling a lot of the content creation and marketing, not just in VC, but the broader kind of tech landscape. Saw in your bio that you'd spent some time looking into the generative AI space. Obviously, it's a hot space right now. Would love to hear a little bit more about what excites you and where are you guys typically looking to deploy capital?
It's a great question. You're right. It is the hottest thing in VC. I don't think you will meet a junior investor at a generalist firm who isn't somewhat trying to cover generative AI. And so I think we're approaching the space cautiously as there's a lot of hype in it right now. Our focus has been far less, I think, on the application layer and more so on the infrastructure side, as I'm sure a lot of other investors might tell you. That being said, I think if you look at the landscape and you project forward, there's a few verticals where generative AI makes a ton of sense. And that to me includes marketing, it includes life sciences and pharma, and it includes fashion and commerce. I think there's applications either that make a ton of sense right now to be built for those verticals, or ones that can be built longer term, particularly for life sciences and pharma, where budgets are massive. Drug discovery is such a kind of key component of that entire industry. For me personally, on the infra side, I've been spending a ton of time on ML ops, understanding what companies out there are building to improve data quality or curation for all these AI models. And I see that as a space that's only going to become bigger and bigger going forward. We haven't made an investment in the space yet, but we've seen a lot. We're super excited about it. And again, we think things are only going to get more exciting from here.
Yeah. And what potential risks are you looking for? Are there any red flags that you are looking for within the generative AI space that kind of cause some pause?
Yeah, good question. When I think about it, again, there's that kind of common question around how you can build a defensible business. And I guess that's why the application layer right now is so hard. And that's a really hot topic. There's a lot being written about it. Really, for me, what I think is critical as generative AI matures at such a rapid pace is working with founders or identifying founders that are incredibly adaptable. If we project forward, even with what OpenAI is going to release this year, which I think will include GPT-4, the landscape's going to change dramatically. Can we find founders that are building right now, but also have that kind of learning animal, as our partner Aileen likes to say, inside them, where they just constantly are adapting, evolving, changing with the environment, and understanding how to shape their business according to what will put them in the best position to succeed. I think that's the key in generative AI because, again, like I said, so much is going to change within the next year.
Totally agree. Up until 2020, there had only been 1 year where 75 billion or more was raised in VC capital. The past 2 years, 21, 22, both saw over 150 billion raised in capital. So there is a ton of dry powder out there. The capital being deployed into the VC ecosystem is more than doubled. Curious to hear what your thoughts are on, what are the longer term effects on this huge influx of capital?
Yeah, it's actually something we've been thinking about a lot at Cowboy, just understanding where we are in this really unique moment in time. Before I jump into the question, I think there's so much value to being a junior investor right now. We're getting such a crazy education because it's been kind of this up and up for the last 5, some people can even say 10 years. And right now we're hitting that real inflection where there's serious questions around what VC is going to look like, what the tech landscape is going to look like. And we get to work under, partners that have seen some of these things before and understand how to operate in that market. So to go back to the dry powder question or the amount of dollars raised question, I mean, it's something we're paying a lot of attention to. And actually, if anybody's curious on reading a little bit more on it, Gil Dibner at Angular had a great Twitter thread, so I'd recommend checking that out. I think at the later stage, there'll be tough times ahead, and that's not a groundbreaking statement, right? I think a lot of companies will struggle to raise and runways will dry up sooner than we expect. And this will inevitably send ripples through the early stage as well. But from everybody I've spoken to who's operated through a downturn like this, the resounding sentiment is that now's the time to build companies, right? And now's the time to invest at the early stage. So for us at Cowboy, even though the times ahead are uncertain, we're super excited to be in pre-seed and seed. We're super excited to have, our fourth fund up and running, and we're ready to partner with people who are building those next category defining companies. So that's how we look at it, right? I think we're approaching with caution. We're working super closely with companies at the later stage in our portfolio, as is everybody else, on making sure we conserve cash, making sure we understand, what we really need versus what was nice to have during that 2020 to 2022 period. And we'll see how things shake out there. That being said, I think with all this influx of capital, again, there's only so many things to invest in. So we might see a bit of a reckoning maybe at the later stage.
No, that makes a lot of sense. I think personally see a lot of opportunity at the growth stage for the reasons you mentioned. A lot of capital being thrown at kind of seed, pre-seed, Series A, and obviously it takes larger funds to deploy capital at the growth stage. So totally see where you're going.
Yeah. I mean, I don't think that it should be all pessimistic, right? I think that's where most people are leaning out of caution. But I agree with you. As time goes on and companies start emerging that are built towards this new environment where multiples aren't so crazy, things will inevitably correct. And having powder out there to fund these companies and scale them is I think, definitely a great thing.
Yeah.
I also think you'll start to see companies, funds deploying less capital. Today, I read that Founders Fund, they only plan to deploy half of what they actually raise and roll some of that money over to the next fund. So it'll be curious how that dynamic shakes out and, the LP response.
Yeah.
And while I do think there's an influx of capital kind of throws off supply demand to a certain extent as far as kind of capital being deployed into companies that are out there. I mean, there's no doubt that it also attracts more founders, right? If there's more capital out there, it attracts more founders, which results in more innovation. As a net for society, I do think it's a strong positive, right? You're increasing the cycle of innovation and kind of the cadence at which it happens. So it's very exciting to see. And I think generative AI and a lot of the trends that you've been monitoring is kind of a very direct result of a lot of that additional capital being put to work.
Yeah, I totally agree. And honestly, would love to hear your perspective too on what you guys are excited about. I know that I'm at the earlier stage. I know, Laura, you look at Series A's and beyond, and Will, you're at the growth stage. But in terms of how you're thinking about the market, in terms of what you're excited about, areas that you guys like, is there anything that stands out?
Yeah, I guess I'm happy to go first. So we're at the later stage, kind of Series B and beyond, and we have strong focus on quantitative analysis and looking at metrics, as a lot of growth stage investors do. And I think for a lot of the reasons we spoke about and kind of a lot of capital being deployed in the pre-seed, seed, Series A, we're kind of trying to pick and choose our spots and be selective and really have a lot of reps under our belt and understanding what best-in-class metrics look like. I think there's a lot of value to be had in pattern recognition. I think that's a really important strategy to kind of understand within the growth stage. Being able to kind of separate best in class versus good and average on various metrics, LTV to CAC, magic number, burn multiple, is really important. It's something that we look at. And I think there are some great websites out there that kind of provide context for that as well. I think Andreessen Horowitz just launched a website that kind of walks through various metrics and benchmarking them, but being able to understand that pattern recognition and look for the various classes of metrics is something that we're pretty focused on.
Awesome. That's super exciting. I mean, I think there's so much value to talking with other investors at different stages. You can get so siloed into what you're focused on, but understanding, how other investors are thinking both downstream and upstream is so helpful, just to get a better sense of, where you should be spending your time, but also understanding that there's other kind of things to look for when it comes to making a good investment.
And I guess the last thing I'd say on that is it does definitely vary by stage you're deploying capital into. So at the pre-seed, seed, Series A, a lot of times you're fueling kind of product growth and engineer hires. And so you're less focused on the kind of market and backdrop that's behind you. Whereas at the growth stage, a lot of our capital is actually kind of deployed into hiring a sales team, building out AEs and SDRs and understanding what go-to-market, SEO, SEM looks like. And so that's when the market really starts to matter a little bit more. And so we tend to be a little more focused on, various subsectors and where they sit within market cycles, maybe deploying less capital in MarTech or ad tech when there's tightening of budgets and marketing teams, and deploying more capital into cybersecurity startups or growth stage firms that, where cyber is one of the last pieces of the tech stack to get cut. And so at the growth stage, I think we do try and keep a closer look and a closer ear to the market and understand what's going on from a potential demand perspective. Obviously, something I think you have to worry about less so in the earlier stage of deployment, but obviously, I'm sure something that you guys are still focused on.
Yeah, and it's interesting because we tend to invest in this awkward adolescent stage. So where the companies are past the seed, but not quite to the growth. So they're going through these growing pains and need the additional capital and support to really help take them to the next level. So it's always interesting to look at the support, whether it comes from, as Will said, a sales side, it might come from a founding, member side, it might come from a product side. It really just varies at the early A and Bs.
Yeah, absolutely.
We're planning to end every episode, and you'll be the first guest to answer these two questions. What motivates you to work hard?
In terms of what motivates me, I think it comes down to learning. And that's a big reason why I love this job. That's a big reason why I wanted to be in venture. I think the learning curve is incredibly steep. You're surrounding yourself with exceptional people, who have experience either as investors or when you're talking to founders. That alone is inspiration for you to want to get smarter every day, or at least it is for me. Being in that environment where I'm constantly being challenged, where people are pushing my thinking and hopefully I'm pushing theirs, that's what motivates me, because I feel like I'm young, I don't know everything. At the same time, it's an incredible opportunity to be in venture and again, be surrounded by people who know so much, but are also willing to share. So that's always been the motivation for me. I think that'll continue to be the case going forward. And I'm really lucky to be on a team like Cowboy where, learning is such a high priority.
I love the humble response. I do think in this industry, you tend to get egos, and the fact that you remain humble no matter the circumstance is huge. And going off of that, what's a piece of advice that you'd give your younger self?
There's so many pieces of advice that I wish I could give my younger self. But when I think about it specifically relating to venture and being a junior investor, I think number one is just be less afraid. I really do think this industry favors people who are bold. And I know that takes some time to build up, but don't be afraid to ask the questions you want to ask. Reach out to the people you find interesting and just put yourself out there. I think this podcast is such a great example. You're starting a new content platform, you're putting yourself out there and doing something completely different. That's awesome, right? And I wish that when I started venture, I had that same mentality when I approached everything, whether it's interacting with my own team or talking to founders, because there really is no reason to be afraid or scared or feel like you don't belong. And in fact, that can be the biggest inhibitor sometimes. So that's, I think, the number one piece of advice that I would give myself.
I love that, especially being on small teams too, where your opinion and voice matters. And it's really integral to have an opinion.
Yeah.
Whether that opinion is right or wrong or in the middle, just being able to speak up and offer that to the team is huge.
I totally agree. And that's what I really appreciate about the Cowboy team, right? I'm working with Aileen, who is obviously such a great figure in VC and such a amazing presence in venture generally. And then obviously with Robbie and Jill and our chief of staff, Allegra, who have so much experience and have accomplished a lot. I think initially going in, there's this kind of, it's easy to go in and maybe be afraid to speak your mind or to have a voice. But what I love about Cowboy is they encourage everybody to, have input, to offer their opinion, and again, to challenge each other's thinking, right? I think that's when we produce the best results. And more importantly than that, right, it's about being comfortable together, right? Being able to work through challenging things together and not holding back. So totally agree with you.
Awesome. Well, that is a wrap for episode 1. Thank you, everyone, for tuning in. And Matt, thanks for joining us.
Thank you both for having me.